Well, howdy, folks. Happy Friday, May 22nd, 2026. There's only going to be one of these days. Let's make it count. Let's get better at reading price action. Our future selves will be ever so thankful. Taking a look at this candle here. So going back over here, this is a SIBI. It acted as resistance right here. It's also inside a breaker, high, low, higher, high. So here's your breaker, here's your FFG. Okay, these are high quality setups. We can see this rejected price here. We traded down to this SIBI. If we scroll out more, as outlined in my other video, I realized we're inside a market maker buy model. So we had sell side taken. This is your low risk entry, first stage accumulation, second stage accumulation with no stop hunt. So yesterday afternoon, I went long here. I was anticipating a little bit price having to work through this balanced price range. We were seeing that. I could have kept the trade open a little longer. And what's interesting is this candle. Whoops. This candle closed above the midway point of the balanced price range, which if price was bearish, never should have happened. So we do see that. We see the very next candle is unable to break lower. Market closes here. We reopen at 1800, skyrocket. Some more consolidation. Overnight, it looks like price wants to break out. We're not going to break out before the opening on a Friday. So we have all-time highs over here. We see this candle close above constant encroachment of a SIBI that acted as resistance, and now we're showing signs that this is not happening. This actually validates it as potentially inversion. Well, actually, it would definitely be right here when we close above it. When it came back down, we would have preferred to have seen constant encroachment act as support here. We overshoot it. We work the bottom of it. That's okay. Then you can see this candle, we close above constant encroachment of the SIBI that we're looking to be inverted. We open at 8, we trade down, and where do we wick off of? Constant encroachment of our inversion fair value gap. We're looking to go long because we've recognized we are inside a market maker buy model. I wasn't at the computer, was having to walk my doggy. And that's where we are. So we got the opening in just a little over a half hour. I am bullish. Okay, this would be the next barrier that we have to overcome on our way to the upside. Right? Constant encroachment of that way. And let's go ahead, let's take a peek. Where did we close yesterday? Oh wow, we closed all the way down here. That's right. I'm just gonna make a note of that. Let's actually just look at this for one more second. we're trading up here. We're thinking price could go up here today. So if I wasn't this long, I'd be a little worrisome that about the opening happening in a little over a half hour. So we do have regular trading hours, previous day's close below. So we're going to open up in a little bit of a premium unless something crazy happens before the opening. And so there's always a 70% chance that we trade back down into constant encroachment of the opening range gap. So hypothetically speaking, if we were to open right here, which of course we're not because we still have time left, price could come back down. Maybe even take out a low before continuing higher. So if I was wanting to go long this morning, I would want to see some type of manipulation lower. And we bring it on back up. Another possibility that I like, I don't think it'll happen, is I've been waiting for them to do this on a Friday since the bull run started, but just at 9:30 just rip it up and then just drop it ever so hard. Would love to see that finally. Been waiting to see something like that. Anyway, this is today's target. The only thing I don't love about it is these are not relatively equal highs. It's the same thing on ES. Let's take a quick peek around the horn. Whoopsie. Alright, so right away I don't love this for continuation to the upside for M&Q. Doesn't mean I don't think. Alright, let me rephrase this. Still possible we come up here today, but I don't foresee it having a monster run higher when I look at this. Unless this really starts to accelerate back to the upside. So this could obviously change once we open, and coming down into the 1 hour on the euro, we actually are seeing a bit of a reaction off the daily fair value gap. So this apologies, inversion fair value gap. See, we did close above it. We're having a nice reaction. So upon further analysis, maybe it's possible. And on the Dixie, of course, I would. There's the Forex one. You'll make me do it. I'll do it. I done did it. Huh. So what sticks out right away to me is all this. So that's not this. So, and it's swept by side here. Right? I guess, are you guys seeing this? We got our relative equal lows here. Trendline liquidity, relative equal lows, buy side swept, displacement lower. Would have loved to have seen this candle go just a little bit lower here. We did break here. We could call this a breaker structure, right, guys? Would have loved to have seen it just drop a little bit lower, but as it is, so you know what? I think we could see a nice drop out of the dollar. Pound. Look at that. Close. Come back down. We're wicking away off the constant encroachment. Not bad. So I'm gonna be monitoring that on my other screen. I know I'm so fancy. I have 2 monitors. I've got 2 monitors. Look at me now, Mom. Look at me now. Alright, we'll do it for the crowd. Oh my god, he's looking at YM. Is YM? Wow. I don't think I looked at YM yesterday, really, on the daily. Finally gonna take out our all-time highs. It's all-time highs, most likely. I was waiting and wondering when it was gonna do that. Almost an immediate rebalance here. So we have the order block. It never comes back down. We've inverted this. Looks like it's just gonna stay open, and we're gonna finally do it today, boys. Yes, daily. We can take these off, right? We don't need these. See this order block supporting price higher. A little bit of a eye gap here. We inverted it. We opened pretty much on constant encroachment of the inversion for eye gap. A little bit of a balanced price range needed to break through. Take a quick week at gold, so I would want to see gold moving in tandem, coming up as well. Alright, so gold has its little busy here. Looks like it's struggling a little bit. I'd like to see this upper area of this busy on gold act as support. Silver. Same thing. Gonna be watching how it trades back down. I'll just have this order block here. Notice that midpoint of this main. Notice that mean threshold of this order block is also constant encroachment of the SIBI. Come on, guys. Sell side imbalance, buy side inefficiency. Guys, study up. We got the ICT test coming up. Alright, let's have the Dixie on this screen. I guess it was called something else. Why did I think it was on Forex? Alright, back over to the micro NASDAQ. Let's take a quick peek at some of the other thing. Interesting. Take a look at Bitcoin. Okay. Let's actually take a look at that just for a second. Pop on over to MNQ for the opening. Mohawk to over constant encroachment of the split. Came back up, bodies are failing to get above it. Over market shift lower, we come back up. Put this fair value gap to the gaze. Actually, sorry, this is not a fair value gap. This would have this wick down, so can't say I would have taken this entry here on the daily, but we do see a nice drop off. Looks bearish, but I'm not gonna be trading that. Oh my goodness. Alright, we've gone around the horn almost. So I'm gonna take actually a quick peek at this. Doesn't this look like it's getting ready to fall out of bed? This is really sticking out. Concentration this way. This is working below this order block. Alright. We've gone around the horn. We did a thing. Has been done. We're going to relax and plan ourselves on the hourly. Which means, most likely, if we, and by we, I mean I, if I see something I like, probably closer to a 10 o'clock entry, which is awesome for me, I think, because you know, big weakness of mine was getting the lower time frames up for the 9:30 open, and oh boy. The 9:30 open can wreck you if you're just looking at lower time frames. All right, so we're starting to get that break lower on the dollar that we were anticipating, and so I think it's quote unquote safe to anticipate higher prices this morning. We'll just be looking for our entry. we do drop down, I don't want to see us start working the lower half of this civvy. I'd want to stay in the upper half. Preferably, I'd like this to form a fair value gap that stays open. And the next candle, we can get in sync with it. So, would have loved to have gotten in here, but was not with the computer. And that's that. Oh yeah, the pound's really starting to work higher. She's a beaut. Look at that. Oh yeah. Oh yeah, you guys. You gotta love it. If you'll take a look at ES, has already started working above this wick. And then Q, we're still thinking about it. We're thinking about it. And of course, no surprise, because we saw the YM working towards all-time highs. YM's also going higher. So yeah, so far I'm liking the hourly. I'm paring down what I'm using from ICT concepts. I think I was using way too much. I was trying to use pretty much literally everything. Opening range gaps, new week opening gaps, new day opening gaps, midnight price, 8:30 price, London sell-side liquidity, Asia sell-side liquidity, previous days PM's liquidity, fibbing the range, weekly quadrant wicks, weekly daily wicks, weekly opening blocks, opening blocks, weekly order blocks. And I mean, you can use all those things. And I'm not saying those things aren't important. I'm just saying it was too much. So yeah, I was using too many concepts, too many time frames. I was all over the place with my time frame usage. 5, mostly the lower 5. Mostly I was using actually 1, 30, or 15, if I'm being honest. It was just... So if you mess up on the really lower time frames, like if you see a fair value gap and you're thinking it should do X, Y, and Z and it doesn't do that, it's a safe bet to say that just your higher time frame analysis was off. Like when you really are certain where we're heading on the hourly and then you jump down to the lower time frames, that's when you should see the PD raise working in your favor. Unless it's a really high resistance day, then you might be seeing some weird things on the lower time frames. I'm just needing to come out here and prove to myself that I can stick to the hourly, and that taking entries off the hourly works and can work for me, because I'm a bit too impulsive on the lower time frames. And I think I've just did a lot of damage to my accounts, mostly from, first it was I was chasing bottoms. That was, or knife catching, if you will. That really blew a lot of accounts for me, and I fixed that, but then ironically enough, I still had a problem shorting tops. And I think what was happening was ICT, he put out, and I'm not saying that there's anything wrong with doing this, but he put out several videos of, I've watched at least 3 or 4 of him shorting tops, so shorting the smart money reversal, and he said that it takes years and years to know when to do that. And I think I watched those videos and I was just like, I think I could do that. And oh boy, was I wrong. But I'm noticing on the hourly, like, I don't get that urge to just mark it by a bottom or top. So it's been good. And yeah, maybe one day with more experience, I could do that on the lower time frame too. Just, tried to jump the gun with that, got put in my place, and we move on from it. So yeah, anyway, one of the things ICT says in the 2023 mentorship is, like, he kind of poses a challenge to only take 1 to 3 trades a week, you know, only the best of the best, based on a higher time frame analysis. And I tried to do that. I did it 1 week, didn't fully follow the rules, and then I tried to do it again twice, but I just couldn't do it. I don't know. I just always kept getting sucked into the lower time frame and just losing my mind. It'd be like, you know, have a couple good days, of course, and then just something about the lower time frame really sucks me in, especially when I'm getting ready to trade or enter a trade, and I just start seeing things that really aren't there. Anyway, that's enough of that. Also, say one more thing about it. I think ICT, it's not his intention, but, you know, all of the videos, or not all of them, but a lot of them, we're doing 5-minute, 1-minute entries, but the reason he's using those lower time frames in the video is because there's a lot more examples. Like, it takes, if you just jump to the higher time frame without spending time price reading action on lower time frame, it's going to take you a lot longer, right? Because the candles take a lot longer to form. So that is a good thing about the smaller time frames, is you get a lot more practice reading price action. So I think Monday I'm just gonna tape read, not even try and take a paper trade, and I'll do a little bit of work on the lower time frames just to stay fresh. In case you were wondering, I know you were. So not surprisingly, we're seeing a little bit of a reaction before the opening. We're not just ripping. Touch that quadrant. Excuse me. Pull them back in. Right, this is why I was saying if I did get in this trade, I'd be worrisome of the opening, and I probably would have just, on a trade like that, due to the time, I probably would have just trailed the stop loss. So I'd either be at sitting at break even, or it just would have been stopped out of the trade, and would not have been anticipating this and this before the opening. Right, so if you can imagine this candle got a lot of people excited about going long. We're pulling back, trapping anyone who went long here. I'm wondering if we maybe want to wick down here and take out pre-market longs, and then maybe rip it higher. These are relative equal lows, and it is at regular trading hours close, so it's possible we could have a slight reaction downwards and then come up higher. I could also be completely wrong and we could just freaking dump right from here. I mean, we got a perfect trendline liquidity lined up. Boom. So maybe a lot of people are wanting to long, and we'll just take it out. We'll see. But I kind of like thinking about different opening scenarios. So the daily fair value gap over here. We've linked up to it. Having a bit of a reaction. So also have this 1 hour city intersects with the daily fair value gap constant encroachment. Excuse me. Okay, just want to show you what I'm looking at on ES before we open here in 1 sec. I'm monitoring this on ES and the other screens, and noticing we have waked up. We do have 1, 2, 3. This is a 3 drives pattern. Do we want to come down, take out pre-market, and unrip? Alrighty, so that's everything I'm keeping my eye on other screens to help guide me along this morning. I'm going to pair this now real quick because I'm about to fit the opening range. I should really do this on the lower time frame. I just realized that. Let's do that. I'm going to drop down briefly just to grab this. Opening range. I'm gonna take this off. Let me go back out to the hourly. Doesn't quite touch constant encouragement yet. I think it looks bullish. Hitting that wick. I like that price left this open, and we're already working above the opening range gap. We're also, we've worked in the lower time frames, we've worked above cost encroachment of this wick, which I like. So pretty bullish, you know, above opening range gap, above cost encroachment of the wick. We got the currencies on our side. We've got God on our side. Also like that it left this open. So stuff. I'm gonna just pop this off for now. We'll label it. If we do start coming back down, we can easily pop that back on the chart. We're still in the opening 30 minutes of New York Open. Noticing price is stalling out a little bit here. And thinking that has a lot to do with what time it is, right? Like we still are going to have a 10 a.m. we still need to have a 10 a.m. candle, so on the hourly, I don't think it quite made sense to just have this be a huge candle yet. Okay, we've left at the moment on the 1 hour. We've left relative equal highs here. So we came right up to here, tripped some traders into hitting that market buy, having a little bit of a pullback. So I will be very interested to see where this candle closes and where we thus then open at 10. Okay, right now everything still looks bullish. Of course, that could change. Look how this came on, I didn't even notice it. We wicked down, touched the top of this inversion fair value gap, and exploded. So, very interesting. So again, yeah, nothing on the hourly indicates going short yet. So we can see this PD array, this inversion field area gap, is obviously a valid one, right? Price rejected here, we used it bullishly here and here. So if price, or whenever price decides to come back down in here, we can use it again. And we can put some trust in it. So if we get a closure, let's say we get a closure below, and it comes back up, we see it open close, we could try and short it, possibly again. Okay, and so we had that pullback, but you know, everything looks bullish and we're already coming back up. And there we go, we get an explosion. I'm wondering if there'll be a little bit of a pullback though in, just to take out anybody who is trying to be a breakout artist. Again, I wouldn't be surprised to see price just pull back slightly into the range. If you're picturing it, I'm just picturing people have orders here to break out. They probably have their stop loss jammed up here at break even, and they're just holding on for dear life. Or maybe it doesn't happen and we just rip. So I guess I was slightly off. I think this candle could just rip all-time highs. So we had an opening, low. I think the low was right. Interesting. So it makes a lot more sense on the hourly. Here's your 1 minute entry. Boom. so this area would be event horizon. It's just the next area I'm monitoring to see if price wants to get to. Once we get there, how we trade around it. Okay, so we're getting that little bit of pullback into the range, right? We just took out anybody who had that breakout order in and had their stop loss shoved up here, or more likely they just trailed aggressively. And came up here. So, not surprised to see this. And yeah, I'm really interested to see where this candle wants to close. Alright, so after we saw this and we did our intermarket analysis along with and seeing that this is a market maker buy model, we anticipated prices going higher this morning. Was a little unsure how far they wanted to. Like, I anticipated a drop, some type of drop with opening. Was unsure how far that drop down would be, and it wasn't very far. We opened here, touched the top of this inversion fair value gap, exploded higher, open, close, right at constant encroachment at this fair value gap. We explode higher. We saw on the hourly, we were anticipating some type of retracement back into the range, taking out breakout artists. We are seeing an open and close right at constant. This is constant encroachment of the 1 hour wick, and so I'm gonna hop off the smaller time frame because I'm getting the urge to go short. And I think it might be a little prematurely, but I'm just noticing there's this fair value gap. We looked into it. This could potentially be a bearish order block, but I think it's a little premature to go short. But like, if I get that, that's how I get sucked into the lower time frames. And it's like, yeah, it could start reversing right there, but I would like to get, or rather these days, I need to get more information from the 1 hour, and just nothing on the 1 hour here looks bearish yet. Obviously, that means I'm gonna miss out on some really potentially great entries, like, because that could be an amazing short entry, but I just don't want to take those trades anymore. Music. What style of music should we put on? I need some royalty-free hip hop. Let's go from country to hip hop. And now we're gonna go rap.
Retro.
Oh, we cooking now. Hey yo. Hey yo. Don't worry, I'm not gonna start rapping. Because I don't rap.
Purchase your tracks today.
So again, wow, this is chill. 1 hour is chill, man.
Retro.
Alright, so some things I am wondering, I was wondering, because these are not relative equal highs, and that was one thing I was wondering about price having the potential to break this because of that. We did see a run to it, so we were expecting that, but I was a little uncertain if we were gonna have enough steam to get up here, and so we are seeing a bit of a, like, I would have liked to have, I was anticipating this move down to the range, but I would have liked to have seen price start kind of working back up already, I guess. So we'll see where this candle closes in about 10 minutes. For it to remain bullish, I don't really want to see the body close below constant encroachment of that wick. I'd like to see it close above. If it closes below, could be a potential bearish signal. You can also grab this. So it's about the same. We can bring it back on. See where this candle closes in 10 minutes. Excuse me. And I mean, we did sweep a nice buy side here, so we don't necessarily have to sweep this to go lower, but I think it is just a touch too soon, at least on the hourly, to justify going short. We are seeing the dollar start to work back up. I would have preferred to have seen this come down more aggressively for in order to justify NQ going up. So this does not bode well at the moment for continuation to the upside. So you can see here, I'm just constantly weighing things out. Right? The euro looked bullish, and we did get a nice bullish move up, but we're starting to look a little bearish on the euro. We're wicking off, or we're unable to even touch constant encroachment of this daily inversion fair value gap. So at the moment that is and look at the immediate rebalance lower. So this is something also have to keep an eye on. This is a potential bearish signal. Would have liked for this to have not this type of reaction, and for us to be working the upper half here. Look at the body of this candle now. We were once so big and bold up here, and we've really dropped off. I know what you're thinking. That was going to be a good entry on the 1 minute first short, huh? I don't care. I just don't want to take those trades anymore. Somebody else can take those trades. That's that. Alright, let's get something better on the tunage. This free rap beat. It's just no good. It's just no good, man. Man, I gotta get back to making music and just make my own background music. This stuff's rough. Ugh, we're back to the royalty-free country music. Maybe we'll go to house in a moment. Alright, we got a couple more minutes till this candle closes. Yeah, this is one of the things that I knew was going to be hard for me, is because I want to stick to the 1 hour, is potentially, or not potentially, I mean, I will miss out on some lower time frame scalps. I know this is best for me due to my sometimes impulsive behavior, which has gotten a lot better with trading. It used to be so bad in the beginning. It was really bad in the beginning. I think that's typical. I think that's a skill you have to definitely learn. And this is Event Horizon. This is CE at Lick. And I actually don't like having these on the chart at all, so I'm going to take them off. Trying to keep the chart nice and clean. My charts were getting so messy. So I was using everything in the ICT toolbox. And there's some great tools in the ICT toolbox, you know? Don't get me wrong, man. Don't get me wrong. We're going to house. Check house. I think there's some better options over here, maybe. Okay, this will do for now. Notice we're still above the opening range gap. I think the candle might actually close above constant encroachment of this wick. Whoa, 10 a.m. coming in hot. Wow, 10 a.m. coming in aggressive, man. We did close above constant encroachment of that leg. It was just I feel like 10 a.m. came in with some force there, man. Wow. Okay, look at ES. Look at ES, man. We're gonna short that. Paper trade. Oh, that's beautiful. Can we get one in? Come on, man. Come on, man. Why you got playing like that? Good gravy. put too many on. I just want to do one. Should have been with the micro. Stop loss is gonna go. It needs to go at least here. 2,000. I forgot we're trading on the hourly. Take profit. We could go. So it needs to be at least a 2 to 1. We'll just do a 1 to 1. I think that's what I've been saying I needed to do. This is just what I love to see, man. Open, close, right here, man. On the fair value again, man. Right there on the 1 hour, man. I like that. It is possible we could come back into here and come back up. What happened to my charts, man? I don't know what happened. Whatever. The dollar is coming up. Pound down, euro down. I am coming down. NQ is coming back down. You know where the stop loss could be? I don't think it's gonna make a huge difference. No, that's fine. This is appropriate. So this area, I want to see price really just show no respect of it and quickly try and take out anybody who's been long from the pre-market, who has not taken profit. They're still in the game. Maybe they were holding for the all-time highs. We're seeing this reaction. We notice these aren't relatively equal, and we are taking a shot. And if we're wrong, then we're wrong. And it is what it is. Yeah, it was just interesting on NQ. I wasn't seeing what I wanted to see on the hourly, but then when I looked down at ES, I was just like, okay. I was like, okay, this makes sense. Alright, so I don't want to see this act as support. I really want to see price just rip through this busy. Tempted to move the stop loss down to break even, but that's been a hindrance of mine, so I'm gonna focus on just being okay with keeping the stop loss where it is and just letting the trade pan out. I don't love what I'm seeing right here. Right, we're having a little bit of a bullish reaction off this fair value gap. I really wanted to see price show no respect. Alright, we're just gonna let this cook. I'm gonna search for some better music. Yeah, not what I wanted to see. But we are, for practicing sake, I'm just gonna stick with it. Also, I think my entry was just because of the glitch with TradingView. I know I wanted to get it on camera, but when I saw this, I wanted to enter. Maybe it came down a little bit. So I think my entry, realistically, could have been more like right here. Would have loved, obviously, to get in here, but I was second or two short as I had my eye on MNQ. At this little bit area that was open. So, besides this, I mean, the next target would, I think, just over here. We'll see. Okay. Now we're gonna be practicing the other part that I've been really bad about in trading is micromanaging the trade. So I know this is just paper trading, but I'm practicing as real I can, so to me this is real. And so what I would need to do, which I haven't done, is just let the trade cook. I'm just relaxing. I've done my work. The money is already gone. If I'm wrong, I'm wrong. I just want to make sure I'm executing the trade properly. And that's that, really. Just going for the good old 1-to-1. Boy, I'll tell you. We're still cooking. What are we doing here? Okay, we're still cooking. I actually think this could drop lower than where I'm getting out, but that's fine. Yeah, it's looking like we might come explore these today. Fridays always have the potential to be a trending day. So close. Oh boy. Oh my gosh. Wow, this trade's still going on. Came really close to my exit, didn't it? Jeez Louise, man. Here I am, trying to do just a one-to-one. You know what? I think it would have definitely, could have definitely gotten in and out without the trading view glitch. So my entry would have been up here and going for one-to-one. It would have hit by already, so. This trade is a W, no matter what, for that reason. So that's cool. And that's that. Yeah, so if there hadn't been a little hiccup, I think I would have gotten in better. Would have hit the one-to-one. Alright guys, I think that's going to do it for at least recording. We outlined some nice stuff this morning. We used the 1 hour for an entry. Saw a nice little drop. Didn't quite get our fill because of some trading view shenanigans. But we did it.